Assalamu alaikum, everyone. My name is Muhi Khwaja with American Muslim Community Foundation. I am so honored to be hosting you today along with Omar Hassan, who is our treasurer, and Awais Dadaboy and Monim Salam from Saturna Capital. We will get into some announcements soon and updates, but I wanted to just take a moment to welcome everyone. We really haven't talked with our customers in a group like this, I think since we started, which is really shocking to me. We've done smaller events, we've done smaller things one-on-one, and we've always, communicated with our donors or shareholders, if you want to call them that. But this is the first time that we are doing an update exclusively to our clients. And first and foremost, like Bismillah ar-Rahman ar-Rahim, just, so thankful that each and every one of you have decided to partner with American Muslim Community Foundation. And if it wasn't for your trust and loyalty and ability to share in our vision, we would not be here. So it's been a wild 5 years, alhamdulillah, and exciting 5 years. But we have been growing since day one, and your trust and support means everything to us. So I just wanted to start with that. Feel free in the comments to introduce yourself, share where you're from. We are going to be sharing a short presentation on AMCF, and then we will turn it over to the Saturna team to do a market update. And then we'll leave the remainder of the time, hopefully at least 15 to 20 minutes for you to be asking questions. So grateful that we have with us not only donor advised fund families, we also have nonprofits who have endowments with AMCF. There may be a few members who participate in a giving circle. There may be others who are fiscally sponsored by AMCF. So this is a real big community of people who want to see nonprofit organizations become more sustainable. They want to see best practices. And that's really why AMCF started, because we wanted to share these best practices with the community. Whether it was for fundraising or leadership development and capacity building, every day we wanted to be able to be helping the nonprofit world. And to this day, alhamdulillah, we've been able to distribute close to $4.5 million, if not more. I know we just did a $500,000 transaction today, so I will say in confidence that it is over $4.5 million. That is the power of the collective giving that each of you participate in. That's the impact that you've been able to make with AMCF. So just very briefly, we will jump in. I also want to acknowledge Asma bin Gabsia, who is on our advisory council. She was a board member, but transitioned to be advisory council on our investment committee. So she's here with us today, and you'll hear from her as well. So hopefully you should be able to see the screen now, and keeping it simple. We wanted to make sure that when you give through AMCF, that you first and foremost deserve the guidance to uphold the sanctity of religiously mandated almsgiving. And what do we mean by that? We're talking about zakat. We're talking about the sadaqah that you give. We wanted to make sure that you receive individualized care and attention for your philanthropic goals. So if you have a vision of being able to set up a scholarship one day in memory of a loved one, or setting up clean water and access in developing countries, talk to us about those goals so that we can make it a reality. We have relationships with hundreds of nonprofit organizations that might be operating in countries that you're interested in learning about, and you only know about one or two. we're more than happy to do the research for you. So, we want to make sure that when you are giving to nonprofit organizations, you have a positive experience. We want to make sure that the nonprofits who are receiving money from us have a positive experience. And we want to make sure that we are able to maximize the impact in the causes that matter to you. In our one-on-one conversations, many of you have shared that you're interested in access to healthcare or education or food insecurity and trying to solve those issues in your local community. And we've talked about how we can work together to maximize that impact with other families who are passionate about those same things. And we want to make sure that AMCF is transparent. We are continuously working on what we can do to better interact with you as a nonprofit, you as a donor, and that's what today is about, transparency. And we want to make sure that when you are looking at your historical impact of your charitable giving, that going forward, whether it's leaving it to charities or leaving it to family members to continue that legacy, it's about sustainability, and investments have a big deal in that journey. So for those of you that don't know, AMCF's vision is to lead sustainable and strategic Muslim philanthropy for today and future generations. Our mission is cultivating donor giving and a diversifying funding to advance charitable causes. And we do this surrounded by certain strategic values. We want to be strategic, we want to be sacred, we want to be sustainable, collaborative, diverse, inclusive, and do it all with integrity. So the idea around community foundations is that collective impact and a collective voice is stronger than one. We want to be representative of the American Muslim community, and we need to reflect the diverse and ethnic and sectarian diversity as well. And we are committed to doing that from our leadership and our board to the charities that we give to the staff members that we hire, and everything in between. So we ensure that we are being representative of the American Muslim experience. We want to make sure that we have the power to identify effective nonprofit organizations. So we just don't have any charity listed in our nonprofit directory. We have over 600 that have applied and have been vetted. And these are the organizations that families like yours give to every day. So we have a nonprofit directory on our website. We highly encourage you look it up by topic or by location and browse through it at your convenience. We want to showcase that when we collectively give and make a ACH transfer to a charity of your choice, that they see it coming from the American Muslim Community Foundation. And that tagline of American Muslim stands out and showcases to the nonprofit organizations, whether it's a local food bank or a hospital or a university or a food bank, organization, that they understand that the American Muslim community cares about them. And of course, we're all about supporting our mosques and schools and civil rights organizations, and they're part of those hundreds of nonprofits that have received this $4.5 million that we've been able to distribute since 2017. So I think that there are very exciting things around the corner for AMCF. And I'm really glad that you're part of this journey with us. Now I'd like to pass it on to Omar Hassan and Asma Bengabsia for this discussion on kind of what we've been able to do and benefits of investments and tax planning and everything like that. So take it away.
Thank you, Mahi. Assalamu alaikum, everyone. Thank you again for joining us this afternoon. I'm Omar Hassan. I chair I'm the treasurer and I chair the investment committee as well as the finance committee. And I wanted to just spend a couple minutes talking to you all about some of the benefits of working with and the benefits that you've seen and the things that you all can continue to accrue on by working with us. And first and foremost, there's many worldly benefits as well as spiritual benefits, but we'll talk about some of the worldly benefits from a practical, from a short-term perspective. And one thing to remind everybody here is some of the themes of legacy, building a legacy, building sustainability, and being strategic. These are all different points that are highlighted here in the way in which you're able to use your donor advised funds. First and foremost, it's you receive the ability to potentially deduct anytime, deduct from your taxes anytime you make a contribution to your DAF. So, for certain folks, that's more meaningful than others. And I think it's something that we, continue to help facilitate and administer to make sure that that is being done and the reporting there is clear and helpful for everybody from a tax perspective. What we like to encourage is building that sort of systematic program for you, and your household that includes philanthropy. It's not that different. A DAF is not that different than your 401k account that you contribute to every month or every quarter. Similarly, we have a lot of folks that contribute to their DAFs on an ongoing basis, set it and forget it. And then, when they want to give to a meaningful cause or when Ramadan comes around, that's basically their account that they can direct and we can make those disbursements on their behalf. So that it always feels like, there's a program and a system that works individually for each one of you. The nice thing about donor advised funds is, the ability to contribute assets at fair market value. That really helps if you're sitting on gains that you don't want to recognize from a tax perspective. You can contribute that to donor advised fund, and that gift goes that much further instead of having to pay Uncle Sam. But from a programmatic perspective, also your DAF can grow over time, create a legacy that is capital based that grows over time, and then you are creating more ways to give sustainably across to more organizations, to more causes over time. So what we try to emphasize is not the year 1 or year 2 giving plan, but your 10-year plan, your 15-year plan. And then you can, pass that to, various generations or other family members to direct it along using our other programs like giving circles and endowments. So it's more of a holistic approach to philanthropy. It's more in the long game, but doesn't take away from what you're able to contribute today, and some of the causes and the programs that you want to contribute. Next, I want to just sort of touch quickly on some of the milestones on the next slide of some of the things that we've been able to do up until this point. And we're very proud of where we are today. We're ecstatic to be able to show you some of these numbers, and we're just scratching the surface. So we have 2 approved advisors that we work with. Saturna is our preferred and advisor that we have both of our capital with. They've helped us return more than 21% so far this year. We like a lot of attributes that they provide, inclusive of their less volatility against the markets. We like that. We've also started our cryptocurrency program, and also looking at other asset classes, that we want to incorporate. And I'll let Esma talk about that. But today, we have over $1 million invested. In next quarter, we're going to have basically just shy of $2 million. And all of this is growing and being used in a programmatic way to give now and to give later. So we're very, very proud of this and looking forward to your continued support to help it grow. So I'm going to turn it over to Isma. She's going to give everyone a good idea of outlook on some of the next things we can expect from AMCF and our investment program.
And just before, I wanted to chime in with a real life example. We had a nonprofit organization. I won't share their name, but they invested $150,000 with us last year. That turned into about $22,000 gain. So now they're at $172,000 with AMCF. And that's, again, thanks to Saturna Capital and their investment strategy and the nonprofit that had the foresight to do that. So again, we can help partner, whether that was a DAF or an endowment or any funds with us, it would have had that impact. So that's the opportunity that we want each and every one of you to take advantage of. And many of you have balances with us and you'd like to make your distributions, but we want you to wholeheartedly take advantage of the investment side of things as well. So I'll pass it on to Asma. Thanks.
Great. Can you all hear me fine? Okay, wonderful. Assalamualaikum warahmatullahi wabarakatuh. My name is Asma bin Gapsia. I sit on the investment committee, and apologies for my mask. I am currently at school, actually. Go to school in the evenings, work in the daytime in investment management, and I will be escorted out of the building if my mask goes down. So I'm going to keep it on for the purposes of this presentation. So if you go to the next slide, Mahi. Just want to share a bit about, what we're working on right now and where we hope to go. As Amana mentioned, we have over $1 million right now invested. And so we're really seeking to enhance and evolve our investment capabilities for a few reasons. One, our vision is to really establish and grow out this community investment pool so that, if a nonprofit, a masjid, might not have $10 million, but could have a couple $100,000, even $100,000 that they want to throw into an investment pool in order to grow out their financial sustainability so that inshallah, 5, 10, 20 years down the line, they no longer need to fundraise and they go from being, a grant receiver to even a grant maker. We really want to set up the infrastructure for them to be able to participate in this, community investment pool to be able to achieve that long-term financial sustainability. Within that investment pool, we want to make sure that we have diversified exposure across asset classes. So, not only investing in stocks, not only investing in sukuk, but really trying to invest in different asset classes across the board. From a risk management perspective, that really just helps us, not put all of our eggs in one basket and really helps us strengthen, the return profile of that portfolio. In addition, as we look at different investment opportunities that we can add into this pool, we're thinking about fees, really trying to, keep fees at a low and obviously also maximizing returns effectively while keeping the risk level that we're taking low. And then again, lastly, we really want to grow out these assets by engaging more American Muslim organizations. And to this point, I kind of want to level set, statistically, what the foundation space looks like in the US today. Right now, there are about $1 trillion in assets under management. That's right, it wasn't million, it wasn't billion, it's trillion in assets under management among foundations across the US. Of that, over $50 billion a year is dispersed in grants. Now, the reason these numbers are really important is because for a lot of foundations in the US, they're actually only dispersing 5%. But because their foundations are so large, 100 million, 200 million, going all the way up to billions and tens of billions, even dispersing a small amount has a significant impact. So then the question that I leave us all with is thinking about, where the majority of our American Muslim institutions are today and how it is we can plant the seeds in order to be able to achieve that financial sustainability. Again, so that, when we go to Jama'ah, there's no longer a need for masajid to necessarily fundraise after every Jama'ah to pay their light bills, but rather they're saying, hey, we have these extra funds, what are the innovative social and environmental efforts that those in our community are doing, and how can we support them? So really pivoting that narrative and just the infrastructure and institutional capacity of our organizations. And this is really where it starts. It starts with planting seeds now that inshallah, 10, 20 years down the line, we've really fully achieved that. And institutionally, we just have so much more capacity to achieve more impact. So that's what we're working on, and happy to answer any questions around it. And again, thank you all for your continued support in planting these seeds.
So we will take questions at the end. Before we pass it on to Owais and Monim, I just wanted to let you all know that this year's annual Symposium and Muslim Philanthropy Awards will take place on Saturday, November 13th from 11 a.m. to 3 p.m. Monim is one of our panelists. We're going to be talking on the topic of growing lifelong philanthropists. So each of you are donor advised fund members, our nonprofit organizations. You are our audience for this event. We want you to nominate community leaders for the outstanding business, outstanding nonprofit, outstanding foundation, outstanding volunteer, outstanding board member awards that we have. And there's also a Youth and Philanthropy Award for kids 5 to 12 and then 13 to 21. And we have a Lifetime Achievement Award as well. So you can find out more about nominating people, and nominations are open until October 15th. And if you're in the capacity to sponsor, you can also do that as well. So we would love for you to be involved. One of our guest speakers is the daughter of Muhammad Ali, Mariam Ali. She goes by May. So she'll be talking about life lessons learned from her family and charitable giving. We'll also be hearing from Linda Sarsour and a whole host of others. So we're so excited for our annual symposium and Muslim Philanthropy Awards. Please get any and all nominations for the awards in as soon as possible. Again, we are finalizing our search for the executive director this week, and hopefully we'll have an announcement to make in the next week. So keep us in your duas through this transition, an exciting growth moment for AMCF. A lot of excitement there. Now I will graciously turn it over to Owais Dadaboy and Monim Salam and allow them to go through the rest of the market update.
All right. Well, first of all, thank you for having us. Assalamu alaikum, everyone. It's great to see how fast AMCF has been growing over the years, and the management team that it has built out as well is, quite formidable. And so, this is the first meeting that we're doing like this, where we talk to you about what Saturna Capital is and what Amana Mutual Funds is. I'll share my screen once the other one is off there, and we'll go through what is Amana Mutual Funds and Saturna Capital, the team that we have, Islamic principles, the fund performance, and then market outlook as well. And I think what we'll do next time is we won't do the full presentation. We'll just give you market updates instead. But for this first one, we thought it would be a good idea to share a smaller version of what we normally do, because we don't have as much time, but still, I think you'll get enough of what you need today. And then we'll be happy to take questions. So let me go ahead and share this. All right. Are you able to see that?
Yeah, we're seeing the presenter slide, though. It's not the.
Oh, okay.
Just flip it around if you know.
All right. So I'm not sure if I can do that quickly here, but well, let me. You can see both, I guess, right? Or let me take this off here 1 second.
If you click at the top, there should be some option, I think, to switch it around.
Yeah, I think it's the top right. Instead of the X mark, there's the one that says swap Owais, and you should be able to hit that. But also his audio or video looks like he's frozen.
Yeah, it looks like he is frozen.
Gotta love tech issues.
Well, while he joins us back on, Moneem, do you want to share a few words?
Yeah, no, I mean, I think like you mentioned earlier, I'm really excited to be, in this kind of agreement together with AMCF. I, like Oasis, have been kind of watching, the growth of AMCF from the very beginning. In fact, when I first heard about it, I was still living in Malaysia, and so when I moved back in 2018, I was really happy that we got in touch with each other, Muhi, in regards to that. Before Oasis gets on, I think what I'll do is I'll just kind of talk a little bit about our funds, and as he gets on, then maybe he can kind of take over from there, just to be able to save some time. So Bismillah, alhamdulillah, salatu wassalam, rasulillah. In the name of Allah, all praise is due to Allah, praise and blessings be upon His Messenger Muhammad sallallahu alaihi wasallam. As Oasis mentioned, this for the first time that we're doing this, I think it's important for us to be able to kind of do a little bit of a kind of recap of Amana, who we are, and where we've been, our journey, and then from there, take it over into the market commentary and those type of things. Oasis, are you back, or should I keep going?
I am back, but continue on for a second until I can load this up.
Okay, no problem. So our journey basically started about close to about 35 years ago, and we have the 4 funds that we actively manage. The first fund was started in 1986 as our kind of pioneer fund. It's the Amana Income Fund. It's an equity income, so we're buying dividend companies that are large cap, and really the objective of the fund is current income and capital preservation. Oasis, I'll let you take over from here.
Okay, sounds good. All right.
Okay.
Sorry about that, everyone. Even with high-speed internet, this sometimes happens. So I'm not sure exactly what we went through, but I'll just start off with this, that Saturna Capital manages the Amana Mutual Funds. Amana Mutual Funds started in 86, as Moni mentioned, and Saturna Capital started to manage it in 1989. Some of what we will talk about today will include past performance, and some of it, we might have a number that you might look at and say, is that forever? No, that's something in the past. And so that's important to know with any type of investment. So if we had a return in one of the funds last year of 15%, it doesn't mean that we're going to have the same return this year. The Amana Mutual Funds does have a proven track record. That's one of the things that's really going for it. If you can go back 35 years with any fund, you're saying something, because you can look at the historical returns and portfolio managers and whatnot. And we do have award-winning portfolio managers and the same advisor for 30 plus years. We do have long only narrow focus lists, which we're going to go into a little bit later, along with the qualitative and quantitative process that we use. So this is the team, just very briefly, just to show you that it is a large team. This is not even the full team, but this is a good size of our team here in America and overseas. We have an office in Malaysia. Moneem was actually the president of it for 7 years. He got back a couple of years ago, called Saturna Sendirian Berhad. And so what that has done now is it's allowed us to increase our team of analysts and portfolio managers and do work outside of the United States as well. The company now has almost $6 billion in assets. When I first joined the company in 2008, we had just crossed the $1 billion mark. So this is a great growth trajectory for our company. 66% of the equity ownership of Saturna is through the employees. 66% of the total of Saturna Capital. Amana Mutual Funds, of course, is owned by the investors 100%. So if you put in $100 or $1 million, you have a portion of the total assets. There's no other owner except the investors themselves. Saturna manages and advises Amana and a few other funds, Saturna Sustainable, Sexton, and Idaho Tax Exempt. Amana Mutual Funds makes up more than 90% of the total. And we do have a very large team joined. I think there was 40 people. Now we have 103, 13 in research and portfolio management as well. Texas and New Jersey, etc. These are the different companies that are wholly owned subsidiaries. Like I mentioned, Saturna Berhad, which is in Malaysia. Then we have the trust company in Nevada. We also have brokerage services, and this is where organizations like AMCF are using the services there as well. And Environmental Corporation as well, which we bought, I believe, 100 acres of land that the Boy Scouts was selling. And we bought it because we wanted to run it in a sustainable way and keep it the way it was. That's in Washington. And now we run classes there for college students and for others to learn about the environment. So what is Amana doing today, and what is the history? We already talked a little bit about how long the company, the organization Amana Mutual Funds has been around, but you can see here that we have investor institutional shares of Amana Income Fund, which was in '86, started then. You can see the assets total. Amana Growth was started in 1994 because we wanted to have the ability to buy growth companies, growth sector companies. So if you look at the portfolio now, it's about 47% in technology. Moni will go into the details, so I won't steal that thunder. The Developing World Fund was started because our clients wanted emerging markets exposure as well. That was started in 2009. Monim actually manages the Income Fund and the Developing World Fund. Participation Fund is a Sukuk only fund, the only one of its kind where it's only in Sukuk. And so this was created in 2015. We had our 6-year anniversary last year. It's the fastest growing fund from inception that we've had, already at $205 million. So what is the screening process? This is important to many of you and to me. That's why I joined the company 13 years ago. Any company that we purchase, it can't be in any of these sectors, right? So no gambling, pornography, alcohol, tobacco, etc. We're not in financial services like banks and the traditional insurance companies. And then we take a second look as well, which is a little bit more difficult than the first part, because anyone can do the first part, right? You could create your own portfolio and say, let me just take out the banks and gambling, and I won't buy Anheuser-Busch and a pork producer and whatnot. The second part takes very deliberate action on our part as well. We review each company every month. The total debt to market cap has to be less than 33%. When we looked at the Income and Growth Fund a few years ago, we were studying it, it was around 15 or 16%. So we're not looking to try to get to that maximum number. And the other number that I'll point out here, which is interesting, is the 5% haram revenues. So, that really comes down to interest income, because almost every company in America that's publicly owned, I think every single one except one or two, has interest income within it. And so as long as the interest income is less than 5%, we're allowed to buy that company. Our average is less than 1%. So, we've been keeping it in line pretty well. We look at it internally. I'm the director of Islamic investing, but we also have external folks. For example, we've hired Amani advisors. They're based in Malaysia. And so we send them our portfolios every 3 months. They have to review them and then send us a certification that we're still, doing things the way that we said we would do it. And if there's any feedback they need to give us, they can do that at that time, every 3 months. So we take a look at every single company that we want to own, and we put it through a screen. We assign it a score, and we're going to buy the A's. And if something falls into a lower category, that's when we're going to be looking to sell it. In a nutshell, that's what this is telling you here. But our sell discipline, if there's a governance failure, that's going to violate what we want. Violation of any of the screens. For example, if someone starts to sell alcohol, that would be, we would have to kick them out, for example. If their debt levels start to increase and go beyond the limits, or if they have secondary income that's haram and it goes beyond the 5% as well. There's also, of course, such a thing as valuation being reached, right? So if you buy a particular company and you looked at it and you said, this is going to reach $100 at some point, and it gets there and you believe that it's not going any further, you can sell. But we are, as we mentioned earlier, we're looking at buying things for the long term, because that's also the Islamic way of investing. So it does help that we follow these principles, because we have the longer holding periods. Some mutual funds will have a 20, 30, 40% portfolio turnover, which means you're selling something and buying something else back that's different than what you owned before. And so, but if you look at our two main funds, Amana Income and Amana Growth, you're looking at less than 10%, churning basically, right? And portfolio turnover. So that helps you not only to make sure to pick the right companies for the long term, it also helps you to reduce taxes because you're not selling all the time and having to take a capital gain. We limit exposure to leverage across fund assets. And what this really means is you're buying companies that have lower debt. And of course you want to buy companies that have no debt, but there's hardly any of those companies. We've run those numbers, not too many of those around. So every company, even if they have $200 billion in cash, maybe you can guess which company I'm talking about, they also have debt. And then, this consistency in the selection process is something that our clients love, especially the ones that have been around for a while. They know about our processes. And as I mentioned, the low portfolio turnover. Now I'm going to turn it over to Moni, and he's going to talk about performance and some of the nitty gritty of the funds. And then he'll also give us a market outlook.
Thank you, Owais. And just as a precursor, I mean, Owais mentioned that I am the portfolio manager for the Amana Income Fund and the Amana Developing World Fund, and assumed that role last year in April. I'm the deputy on the Growth Fund, and Scott Klimo is the portfolio manager there. The Amana funds have had a long history of having an excellent fund manager ever since Saturna took it over in 1989, all the way up until last year. His name was Nicholas Kaiser. And the growth, the awards, and the really good return has really come from that. So and both myself and Scott have learned quite a bit from him. As I go through the portfolio stats, one thing to keep in mind, a couple of things on this slide that I want you to keep in mind. Number one is the numbers are as of June 30th, right? And normally whenever we report information, we do it on a quarterly basis. And just so happens the quarter ends tomorrow. So if we were probably doing this presentation next week, it would have ended up being September 30th numbers. So that's one thing to keep in mind. The other one is just as a quick, information on alpha and beta. So what you're trying to look for is anything above a 0 when it comes to alpha. And what that means is that you're doing basically better than the market on a risk adjusted basis. And the beta, you want to be less than 1. And that basically means that when the market is going down, you're going down less than the market is. So that was the other one. So both of those in this particular case, alpha being above 0 and beta being below 1 means that we're giving you a better risk adjusted rate of return and also protecting on the downside when the market goes down, which is what you want to do in an income fund. The sector allocation for the fund itself, kind of breaks down into healthcare, technology, and industrials are kind of the major drivers. One thing to keep in mind is we do strategically use cash sometimes to be able to kind of ride out some market volatility. The overall themes that I want to kind of highlight on that we're looking for, as Owais mentioned, we like to be able to hold companies for long term. So what does long term mean? So just to give you a couple of examples of that, like for example, a few companies we own in the Amana Income Fund, we've held for 25 years. And so that's a fairly long time, but what we look for is, really, buying into the philosophy, the long-term outlook of the company, the management, and then watching them, monitoring them to make sure that they're keeping up with the growth trends of the industries. Management is still strong and solid and leading the charge when it comes to the industry that they're in. So that's what we're actually looking for. Now, when we do that, in this particular case, our largest holdings, we typically tend to end up buying only about 2% in purchases in the fund. And then if you see something, getting up to like Eli Lilly at about 8.3%, that means it's had quite a bit of a run to make it increase the size and to become close to about 8.3% of the portfolio. It doesn't really matter as much to AMCF or probably your accounts here. However, if you did have a taxable account, we are very careful about how we manage taxable gains. But majority of our shareholders, even in income fund, are in retirement and are charitable accounts. So our goal is to be able to give a total return, which is complementary both to dividend income and also to capital gains as well. Okay, so that was on the income side. On the growth, just one, but yeah, there you go. Again, the growth fund being heavily in technology, has had a really good alpha adjusted rate of return as of June 30th, and then also the beta still were well below. Where the market goes down, we basically go down less, and we've been able to do that with companies that we own. In technology, we've owned Apple since the late 90s, Adobe since the mid 2000s. In healthcare, we've owned Novo Nordisk, in the area of diabetes since 1994. So long-term holdings, but as long as they're doing, their outlook for the future is positive, then we're going to continue to hold on to the companies. Next slide. Again, I mentioned some of these companies' names. We are, heavily in this, and towards when we get to the end of this, I'll talk a little bit about our long-term, and this will kind of explain to you why we're in these particular companies now, and we have been for a long time. And then we have the Developing World Fund. This one, again, adjusted rate of return positive, below the market when it comes to negative. And here, in the first two, the market basically was the S&P 500. In this one, when we talk about market, we're talking about the MSCI Emerging Markets Index. And again, heavily in technology, a lot of semiconductors and those type of things, not only in the emerging markets, but we are allowed to buy developed market companies, but they have to have significant over 50% of revenues and or assets in emerging markets. And so this is kind of exposure right now is mostly in Asia, some in the Middle East, and a lot of it in US, but that US means that their manufacturing facilities and or sales are coming out of Asia. Again, a lot of these technology names, some of them you might be familiar with, others you might not be. As of June 30th, this is the date, but when we come up with our next month's numbers, you realize that most of our China holdings have been sold off just because of the volatility in the Chinese markets, and we never really know what's happening with what the government's going to announce. But that being said, we have a lot of other companies as well that were in there. And the last one, and we're kind of wrapping up a little bit. This is I always mentioned the only pure sukuk fund that we have in the country. This one, is investing in halal income certificates, either from Islamic banks, from government entities, and from other companies as well. And this is the kind of thing that you'll see in this particular slide as well. A little bit about, people ask about the returns all the time. So this, again, as of June 30th, these are the numbers that you have. But on our website, we actually update those numbers on a daily basis and then also on a quarterly basis. And so if you wanted to get the latest numbers, you'd probably be better off just going to our website, because that'll give you, by Friday or by Monday of this week, you'll have the September 30th numbers that you'll be able to compare relative to a benchmark as well. I did want to just highlight one really quickly thing just on a long term, and we'll open up for questions, and if there are any, I'd be happy to answer them. As we are basically looking at the long term, what are areas that we're looking towards in the future to be able to kind of take advantage of? 3 areas I want to focus on is, one is electrification. Electrification doesn't only mean cars, but it also means making houses energy efficient, buildings energy efficient, all of that, everything that around this idea of carbon neutrality, energy efficiency, and electrification. That's what we're looking at in these type of themes when we're looking for companies in each of our different funds. Number 2 is healthcare. As the population ages, pharmaceutical companies, we're looking at hospitals and a medical supplier, medical equipment makers, everything that'll basically help mankind live longer and live healthier. That's actually what we're looking for. And the last one is what's called Internet of Things. So, and the major theme behind Internet of Things is basically semiconductors. They are the brains behind everything that happens. So, for example, if you have an app that tells you if your toaster's on or your fridge is becoming too cold or too hot, there's a semiconductor in there that's actually powering that brain that's giving you that information. And so really, the Internet of Things is really behind semiconductors. And that's why if you're looking through our portfolios, you will find a lot of semiconductor companies because they are what's going to be driving the growth into the future. So those are the kind of 3 themes that I wanted to talk about. That's long term. Again, next decade or so, what we're looking at to be able to, invest in and really take advantage of what we feel is going to be outperforming the market.
So a few points, and thank you so much, Moneem and Owais, for sharing all of this. And their information is on this slide if you wanted to ask them questions directly. Some things to note. AMCF has been investing primarily in the institutional shares, and those usually require a minimum of $100,000 investment. And we can do that because we're pooling together the investments on your behalf. The other thing to note is that unless you individually, as a family or organization, invest more than $250,000, AMCF will determine the investment strategy on your behalf and based on your preference of a conservative or aggressive portfolio. So we can help you diversify if you bring in more than $250,000 as part of your investment strategy. And then lastly, a reminder that AMCF currently has an opt-in policy for investing. We may change this in the future, but still we are opting in. So that means that if you have a DAF with us, you need to let us know what portion of your DAF you would like to be invested. For many of you, I've shared different updates, and we can give you updates on a monthly basis on what your investment performance is for your DAF. So I understand that the transparency there isn't as real time as many would like, but that is something that we're working on. And we currently invest on a quarterly basis. So at the end of the quarter, we do our investments. So that's why we chose this week to do this presentation. So if you are interested in adding in more funds, investing funds, let us know as soon as possible within the next day, hopefully, so that we can include it in our end of Q3 investment pool with Saturna Capital. So I will leave the rest of the time for people to ask questions. If you have a question, feel free to come off mute. Use the raise your hand function so we know who to call on. And then also make sure to put any questions in the chat. And Basil Hashim says, can you discuss the use of the purification calculator in parentheses, in quotation marks, as well as how you advise Muslim nonprofits and others who want to be strict with their halal income generation? So in terms of the nonprofits, we chat with them and we talk to them about Saturna Capital and Sharia compliant investment opportunities. I'll let Moneem and Owais discuss more on the purification calculator.
You gonna take that, Moneem?
Sure, I can. So Basil, thank you for the question. Part of our Islamic investment guidelines, Sharia scholars say that is that portion of your dividend income that actually comes from a haram source needs to be purified. Now, if you recall back, and I'm just getting into the basics a little bit, if you recall back, Owais had mentioned that 5% is the maximum haram income that you can have. So obviously your purification will never be more than 5%. And that's not how the max works, that actually works. So what we do is, because we have a significant, about close to 50% of our investors are actually non-Muslim, we actually don't purify on behalf of our investors. Some funds might do that. What we do is on our website, maybe Owais, if you can just put this in the chat, we have a calculator that you can go there, you can put in the number of shares that you own. And for the last fiscal year, which for the Amana funds ended in May 30th of 2021, you will get the purification amount that you need to purify. From there, you can go ahead and either take it out of cash flow, your bank account, those type of things. You can sell out of some of our funds to do that and those type of things. The one thing to keep in mind is people sometimes do comments like, wow, it's a lot smaller than I expected it to be. That's the point. We don't want this number to be very large. The lower the number is, that means the cleaner your investments are from haram sources.
Great, thank you.
And one thing that I would just add is, when you're investing on behalf of your DAF is a restricted account that's only being used for charity contributions. So by definition, you can add to your DAF if you have other investment accounts that you want to purify. It's a good way to do that. But no need to worry about it for your current DAF accounts, because that will be going to be used for halal causes, inshallah.
Yeah, I guess my point is that I am not sure many of the Muslim nonprofits are aware that they may need to do some of this purification if they were actively managing it. So maybe you just want to be a little more clear with them that this is, if they want to be really strict about it, that they should be doing this, right?
Mm.
What other questions do we have?
I have a quick question for Monaim. In terms of some of the research and outlook type indicators that you guys like to look at to try to get ahead of potential material market movements, and do you guys do anything to try to mitigate sort of volatility? Because one of the things that we like about working with Amana is the lack of volatility versus some of your competitors and the indices out there. So it'd be great if you could share some of that insight.
Yeah, thanks for the question. So I think the number one thing is our founder chairman likes to say is the best way to make money is not to lose it in the first place. And that's where the volatility comes from. We really try to look for companies that are going to be as stable as possible. I say that with a caveat because markets are markets and they are going to go down. And obviously, in order of risk tolerance, you have the participation fund, which has very little volatility, then the income fund, which is a little bit more, and the growth in the developing world have much more volatility than that. What we're trying to do is really look at it, say that in every cycle that you have where the markets are going to have, let's say prolonged period of downturn, there are going to be survivors and there are going to be those that fail. And typically what happens is they fail for a few reasons, one of them being they're highly indebted. But the second one is that they might have fairly, I wouldn't say weak management, but not as strong management as some of the other companies. So really that's what we're looking for when we're buying companies, is that their ability to survive through economic downturns. And then at the same time, management that has experience in being able to navigate these volatile times as well. And a lot of times what we found is the companies that we buy coming out of any kind of crisis, they're the ones who are not only surviving, but they're eating up all of the weaker players, and then growing and being able to do well there. That's done for us, on a quarterly basis when numbers are released by each of the companies. We are monitoring them. We might not report on it just because, if we have a 10-year outlook, maybe a quarter doesn't matter. However, each analyst, if there is a significant development in the company in the last quarter, then it is something that they will report upon, and it's up to the portfolio manager to make a decision as to exactly what to do.
There was a question on the user portal for AMCF. So, we are still in the transition of upgrading our CRM, client relationship management tool, and we've been able to integrate it in phases. So the nonprofits register in the new CRM. We have grant cycles available in the CRM, but the feature for looking at your balance or requesting distributions is still a manual process at this moment, and we have those forms available. So unfortunately, the CRM originally overpromised and underdelivered. They actually told us that it would be ready in May, and it's still not ready. So unfortunately, it looks like November. but I'm hopeful and we will stay on top of them. They have been very gracious and they're actually sponsoring our annual Symposium and Muslim Philanthropy Awards because of this erroneous error on their end. So they have committed to making up for it, but I understand that it puts our user experience at jeopardy. And we are doing everything that we can to kind of mitigate that and work through that concern. So thank you for your patience in that. I know that that was a feature that so many people were looking forward to, and I as well, because I want to make sure that we have great customer experiences, and we want to make sure that we focus on that and make sure that we meet that timeline. Rashmanti asks, Jazakallah, interesting insight. Do you do Muslim entrepreneurs of IPOs? Do you advise Muslim entrepreneurs of IPOs?
No, we do not. We do invest in public markets, obviously, but we do have a rule of not investing in initial public offerings until after 3 years of them going public. And that has to do with part of the volatility that I spoke about a little bit earlier. So no, unfortunately, we don't.
Great. Well, as always, Owais and Monique, feel free to drop your emails in the chat, and we will be sure to follow up with anybody who has additional questions. Again, if you want to make an investment through your DAF or add more money from your endowment, please email invest@amuslimcf.org, and that will come to Omar, Asma, and I, and we will make sure that your investment goes into this quarterly investment cycle. So thank you so much for joining, your generosity, your support. We hope to see you at the Muslim Philanthropy Awards and Annual Symposium on November 13th. Take care and Assalamu alaikum.
Assalamu alaikum.